YouTube, what up? I have a new podcast episode for you today. It's wild and Bitcoin's volatility is pretty low, so I suggest you watch this. Had to take a little bit of a break. I broke my computer, as you can see right here. It sucks, but we're back to streaming. I'm back to the episodes and we're back to the daily videos as well. Today's episode is so wild. I have on Dan Matuszewski, co-founder of a prop trading firm. That trading firm is called CMS Holdings. And Dan previously was head of trading at a desk that saw about $24 billion change hands last year. Pretty wild numbers. So the real reason I wanted to have Dan on, he talked about this trend that I had never heard of. People think about ICOs being a crazy trend. People think about DeFi being a crazy trend. But there was a trend in Bitcoin's history called Bitcoin stocks that had people turning in $5,000 to $1 million. It's such a crazy story. So stick around for that one. It's right after the intro. Also, we talk about current themes in the market today and how to trade them. We look at DeFi. We look at Bitcoin versus ETH, Binance coin, exchange coins, and lastly, that Grayscale premium. It's a fund that's been buying more Bitcoin or acquiring more Bitcoin than's even mined. But I wanted to ask Dan, what's actually happening there? Are they really buying that much Bitcoin? Are people just depositing Bitcoin? How does the trade work? And how can you do the trade if you want? I think you guys are going to dig this episode. Thank you for watching. While I have you, hit the like and subscribe button right down below. It helps us grow the channel. Now enjoy the episode. I'm always grateful when I get people that I follow on Twitter or I've heard on podcasts that, investors I learn from, get info from. And there was actually someone else on Twitter who I follow, and they put you in like their top 5 people that you need to follow to keep up with Bitcoin or keep up the crypto market. And your name had an asterisk, actually. It kind of caught me off guard.
Oh, really?
Yours, I think they said you troll too much. So before we get started, I just want to say I really respect the trolling. I think that's a positive.
All right. Hey, I mean, if you're not having fun doing this, like, what's the point? Like, there's some people that just take themselves too seriously, I think. I hope we don't fall too far in the other direction, but yeah, it's all in jest too. I don't really mean anything. Like, I think this is so I'll say this too about crypto. It's the only time I've ever traded an asset class in my life where everybody's still sort of on the same team. Like, yeah, there's like a lot of infighting between like projects and like some people can be terrible, but like in general, like, especially in the trading side, like people are super sort of helpful with each other about like, I think this is happening. I see this thesis. And like, sometimes they talk in their book, but you don't get that in other markets. Like, you don't like see like hedge fund guys like sharing color with each other to try to like get like a better position or a thought. Like, it's much more adversarial than it is like in this. And I think it's also because there's just so much edge still. Like, we're sort of, everybody who's doing this has like the baseline assumption that like the asset base as a whole has to lift for it to like really sort of make sense. So like you're in it in that sort of way together, but it's not like that outside of crypto.
We're not.
You've never traded another product.
We're not fighting for bips. We're fighting for a much larger percentage, hopefully. So the idea is, it's a little more relaxed.
Yeah, totally. Like, so Bobby, the guy who is one of the partners here, worked at DRW forever, which is a big Chicago shop. And he said one of the big issues that they had was they didn't really want to work with the other shops in Chicago, right? Like, Jump's around there. There's like the Hayenmeyer or whatever, the one that just like said they were flipping over to only crypto. There's like CMT. Anyway, like there's a bunch of shops that have much bigger other businesses attached to them. And because of that, like, culture that's developed, like, they don't really talk. Like, they don't, like, the crypto guy at Jump's not talking to the crypto guy at DRW, who's like not talking to the crypto guy at Susquehanna, which is kind of odd because like I feel in crypto, like, everybody does talk a lot. Like, I'm really good friends with the guys who run Genesis and like the guys who like started Cumberland. Like, we talk a ton. Like, we like have kept those relationships alive forever. But like at the end of the day, we were ultimately fighting for the same flow at Circle, but we weren't ever really adversarial in that way. So I don't know. I think it's good. I like it as a community sort of deal with. Like, it can get a little much, but it's become a little less emotional, I think, in the like recent times. It was bad and when the whole BCH fork was going on, but it's calmed down.
We're going to talk history actually before pre-BCH fork. Pretty wild story that I saw you reference, but just to give people context, they might have heard some of those names you threw out. Circle, I'm sure they're familiar with Kraken, they're familiar with DRW, whoever it might be, but they might not be familiar with CMS. Just to give context, what is CMS? If someone follows you on Twitter, they might go to your website. Yeah. It's not flashy. You had a really funny segment on Nick Carter's show, and you guys were talking about the flashier the website, the more warning signs, right? That firm might just be trying to sell you something, too much marketing. They're not focused on alpha enough. So what's CMS for people that clicked on your website and said, what the hell's going on?
Yeah. So CMS is just, it's effectively, it's a hedge fund that's not structured as a hedge fund, but we trade it and treat it as such. It's three partners, me, Bobby, who I just referenced before, and a guy named Julian, who had worked with me, got to be like 10 years ago when I was in the hedge fund space. We started it up. It's just partner capital. We trade it pretty much the same way we would if we had outside funds, but we don't. So it's really structured more like a tech company. Corporate wise, but like really fundamentally trading the same way we would if we were managing outside money.
I'm curious, why do that? Just to be more nimble, or?
Yeah, so it's a good question because we go back and forth on this, and we definitely went back and forth on this a lot when we first started. Was like, do you take outside capital or do you just sort of treat it the way we're doing it? So I guess the first reason not to take outside capital is you start to like drown out your own returns, right? So there's some capacity constraint in crypto. Like you can only be so big before you become just like beta, right? Before you're just Bitcoin. And that's fine. Like you can like sell that as like an investable thesis too. I mean, like that's worked for people. But really what we think in like the capturable edge that's in the market, like what we think we can really sort of earn above market returns consistently on is a fairly small amount of capital, of which we were able to like provide personally enough to like get us to a number that it makes sense. So there's two ways we can do this. Like we either keep growing it as we're doing it and we like keep looking for a different like edge that's like capturable in the market and keep it sort of small, or you go out and you raise a ton and you sort of try to be more of this like beta vehicle, which I don't think we wanted to do. And also like, frankly, like having investors is a pain in the ass. Like I think everybody knows this, and like, I don't want to spend my life fundraising. Like I don't want to be on a plane every like couple months. Like I don't want to be like talking, like that's not what I wanted to do post Circle. So right now there's no plan to do that. But who the heck knows? Like maybe like the world changes and like the asset class grows up and like suddenly you need 500 million to like really be a player in the trading space. Like it's not true now, but there's a world where it gets to that. So then we would like readdress it then and like figure out sort of how it goes.
That makes sense. For the size of the asset class is kind of what you guys needed. It's what works.
Yeah. And also there's a lot of access to, first of all, leverage, but there's also pretty good access to borrow. So like we've been able to like lever up and do things. Like we haven't felt balance sheet constrained yet. And the second we do, like we'll start thinking. I mean, we just hired a couple more guys, so that may bump up a little bit quicker than we thought. We're moving more into the derivative space, but we'll see as it goes.
You've seen, I mean, things are going to change. Obviously, it's going to get bigger, but trends and it seems like the hype cycles around them have not changed. You know, going back to, well, currently we have DeFi. Going back we had ICOs. Before that is this tweet that I saw you post. I don't know if this is a week or two ago, and immediately I said, "What the fuck is fried cat? What are Bitcoin stocks?"
And I said,
we have to dive into this trend, this theme, because if you can understand past themes, maybe you get some insight into kind of the hype cycle or what kind of legs a current theme does. So, what is a Bitcoin stock? You had this thread. You said you were going to break it down. What's this part of Bitcoin's history?
Yeah. So, I'd say this, like the whole, people were like acting like ICOs and like mania were like, they're like, how, this is crazy. Like I've never seen anything like this. And like when it was happening, I remember saying like, this is exactly like the Bitcoin stock exchange bubble that like happened 4 years ago that like nobody obviously remembers anymore. But like, this is not unknown behavior for this asset class. Like, I don't know if there's like just a tendency of people who are willing to take a lot of risk and get into crypto anyway to like take more risk on like derivatives of those. Like, so I think that's a lot of it. Like I think you have like a very high
big crossover
risk taking. Yeah, like like if there's like, so ICOs like obviously stuck to it. But anyway, the first iteration of this that I really saw in the market was this Bitcoin stock sort of exchange mania that happened for like a small period of time that the SEC actually like stomped out very quickly.
What year was this? I don't want to cut you off, but what, just to give me context and people listening, like when was this going on? Bitcoin stocks?
I think it got started like mid 2012 because like when I got into Bitcoin towards the end of 2012, it was already a thing.
Okay.
But hadn't been for long. Like we were in like the third or fourth month of this like thing rolling in. I'm sure there were things that like predated it, but they weren't like large enough. It's like, I don't know the exact pinpoint start thing on it, but let's say it's around there, like mid 2012 timeframe.
Okay.
And like I said, like it really piggybacked on the switch from GPU to ASIC. Like that was like the background thing of like why everybody was suddenly interested in this, and there was like a thing to sell. So like, because there had been like, I think there had been like stocks like previously liquid and like are out there. Like I know Satoshi Dice had their like S Dice.
Like equities of a Bitcoin focused company.
Yeah, but like they were much looser in the sense that there was not like their docs or like filings or like it was more like it was negotiated over Bitcoin talk and it was like an IOU and like you kind of just had like a ton of trust and like it was not like formal. You weren't like signing like a SAFT or like or a safe or like a convert or like some actual, nobody was pricing it. It really wasn't like a financing of a traditional sort of equity thing. It was much more like, hey, I run this miner and I'm going to sell off 50% of it and like these shares are going to go for X. Do you want to buy them? And like that was how it was operating. It was really heavily geared towards the mining stuff. Oh yeah, like but they weren't pretending they weren't equities. So like right, like the ICO world was very cognizant that there was like legal risk on this.
Sure.
Mostly because the numbers got really big and they like hired lawyers. We're talking about like much smaller numbers. Like people were raising like 100, 250 grand or like 25,000, kind of like very small ball stuff. So like nobody was getting legal opinions on any of this stuff. So they were just straight up selling equity. Like they were calling it that. There was no like ifs, ands, or buts, which is definitely why it was like immediately on the SEC radar. But yeah, so there was a bunch of these that were doing it. But the big one, so like I felt this way about the ICO boom too, right? It's like you usually have like a couple or like one really good windfall event. And then you just get this stampede of copycats. And then like the mania sort of sets in.
Sure.
And like that big one for, there's a couple, but like the big, huge one, like the blue chip Bitcoin stock, if you had to like pick one, was this company called ASIC Miner. And so to go back, like I was saying, there's the big switch over from GPU to ASIC happening. And this was like a really big unknown thing in the market. It was like everybody knew somebody was going to get an ASIC. Like that was like known to be like happen. But it was who's going to get it and like who's going to get to it first, because being first was just huge, right? You would get all this chance to mine with no other ASICs in the market, and you would just be like minting Bitcoin over and over and over and over and over again. So there was this real race of people to like try to get into this thing. And the problem with developing it as an ASIC is it's like very expensive. Like there's just like an initial nut that's like, I don't know exactly what it runs you, but it's definitely in the millions of dollars range. And in order to be able to sort of get this thing even off the ground, like you got to get money somehow. Now you could be like, well, why didn't like larger corporates or like why didn't like a company like come in and do this? The big reason that didn't happen is just Bitcoin was too small. Like it just like it didn't make enough sense at that price for somebody to come in and take all that risk. But obviously people who believe in Bitcoin like were taking that risk.
Price is roughly, I'm trying to pull up a price chart. Price is roughly like 150 at the time, if you had to guess. $100, maybe less.
Yeah, I mean probably less than that in the beginning. Like when ASIC Miner first sold, it was definitely like in the teens kind of level.
Okay, yeah. So this is 2013. It's like $60. Okay, yeah. So teens.
Yeah, because in 2013 you get that first run up in like Q1 that like sort of brings that. So it was like definitely low. Like I think it had just come off 30 and then like come back down. Like it took that like real crappy March like back. So, but yeah, it was tiny, right? Like you could be like, you're gonna mine thousands of Bitcoin a day if you get the first ASIC, and be like, well, that's like 20 grand. Like I don't know, is this like a huge business for me? And like how much am I paying in power? And like what if it goes down? So you really had to go to the Bitcoin community and be like, hey, do you guys want to? Which is what this one guy who calls himself Fried Cat made this like Bitcoin talk post and was like, I have enough like knowledge of this to give it a real shot. It might not work and you may just like lose everything you put in, but if it does, I'm just going to pay you back dividends of Bitcoin like as I mine it. So it was like the investment was tied to a Bitcoin address. So like you would get the dividends back to the address like as like they mined it. So like there was, keep going.
I'm going to pause you for 1 second. I found the post. I think, I forget who posted it. It was below your tweet. I think it was actually Dan over at Masari.
Yeah.
And this is from Fried Cat back on, what was this? August 9th of 2012. The dividend payment, the income, including mining income, sales via Bitcoins, and fiat income are paid to ASIC Miner and the BitFountain shareholders proportionally. After the ASIC Miner shares are paid by 0.1 Bitcoin each, dividends will begin and maintenance costs are taken out. So what? It's this idea that you're getting a chunk of his ASIC revenues and he's somehow paying you based on it's like you're contributing to an ICO, but just with Bitcoin, and you're getting paid back in mining revenues is the idea.
Yeah, basically. And then they would sell hardware too. So you would get it like on the hardware side.
Okay.
Yeah, it was definitely like, I mean, it's like a stock. Like, I mean, I don't understand, like, or it's definitely a security.
Is it
Like maybe
Bitcoin
it's like,
denominated or?
yeah, it was all in Bitcoin. There was never any dollars like mentioned in any of
Okay.
like the like I think it was point one was the initial nut that you had to put out for it, and then like so you got paid that back, and then they split it evenly between, because I think the Bitfountain ones were what actually like got sold to people, and then like the ASIC miner ones stayed with them. I don't know. I never really dug into the corporate structure because I was like, it doesn't really matter. I have like no recourse here anyway, so like if I'm doing this, I'm doing it.
For sure. So
But
how
yeah,
does this bubble up? So I get the
so this
idea.
bubbles up. He bubbles up because he does it. He like nails it. He like gets one of the first ASICs out there.
And he's
So
actually
like,
paying people.
and he starts paying people. Yeah. So it's like he did it. Like this was the big thing, right? Was like, can this actually get done by this guy in the time frame allotted and like it be successful? And then B, it's like, well, it's not a scam, right? Like he's not just like, all right, I did it, and like, but now I'm not going to give it any of the proceeds to you. When it wasn't. So he started paying people back like immediately. Like people started making, like they made their initial investment back very quickly.
Yeah.
And then they started like earning multiples on it, right? So it really took off. Like I don't remember the exact math, but it was something like crazy. Like $5,000 invested in it, like was $1 million because Bitcoin appreciated too in like 5 months or something like that. It was like something just really, really crazy. And because like people see stuff like that, that's like where the mania sort of like hits in. So yeah, like but so at the peak, it was 5 Bitcoin a share, and it would traded at 0.1 Bitcoin, right? And that's like excluding the fact that you'd already gotten dividends to like cover all of it too. Like that was like the top.
You're getting Bitcoin
top.
dividends as your share is rising. The Bitcoin price of your share is also rising, and the Bitcoin price underlying is rising.
It's just like every like possible multiple you can hit on it is just going. It was just like a home run for anybody who like got in on that thing early.
How did, like, I understand he was paying out, but was he just randomly selecting how much you'd get paid? Like who's making sure the fried cat is paying out? What if one day he wants to keep more of the profits for himself? Like why was he paying out millions of dollars?
So it was public. He was, well, I mean, like you don't know, right? You don't know if he was cheating everybody. I don't think he was, because like they were also making a ton of money.
They made killings,
like, yeah. So like, but it was public, like their hash rate.
Okay.
They were like broadcasting, so you could see it on the network, which is how like people knew how big it was too. So it was a big chunk of the hash rate at that time. Yeah, so it was quasi public because you never really know if he's like got other stuff on the side that's like not there. But yeah, I mean that was generally like fully visible, and you knew how much you were like people would calculate how much the next dividend payment was, and like it was all on chain. You would like see it all come through. The one like it wasn't decentralized in that sense though, because like it was just like a spreadsheet that had like the addresses and like right and how many shares they owned. It wasn't like any of this was like in some smart contract or some like ERC-20 thing. It was just like really just like kept like and if you wanted to, you could transfer shares, but it was like a pain because like you had to like coordinate it with somebody to then like get it to like switch over. But and this like was also like why the exchanges became super useful, because they just became effectively custodians for like a huge chunk of the shares. They would pay out the dividends on their end, and you could like freely trade them.
In some ways, I respect it. It's a pretty honest way to say this is not decentralized. This is centralized as hell. The man fried cat is running it, and you just kind of have to trust him. But it worked.
Yeah, you had to trust him from the get. Like if you were worried about like, oh, there's not sufficient decentralization on like the payout thing, it's like you're really missing the forest of the trees here.
So enter Bitcoin stock exchanges. This mining thing ramps up. Fried cat turns out to be a good guy. Everyone's making millions. And Bitcoin stock exchanges. Because when you said exchanges, people are probably thinking Kraken. They're thinking Huobi. This is a Bitcoin stock exchange.
Yeah. So like what you have after that is, so I think they actually IPO it like on one of the Bitcoin stock exchanges, right? Like they basically had this exchange created to do it. But I think that was GLBIC. But then anyway, so what ends up happening is people are like, oh my God, I can buy these things and like quadruple my Bitcoin like in a week. So like there's obviously going to be fast follows of people like creating more things. So you get like a huge, basically copycat model of like people trying to like launch these things, and they all need to trade somewhere. So they end up launching on like these two big exchanges. So BTCT was the biggest, and then Bitfunder was probably the second biggest.
Okay.
And they were just like regular exchanges. They were all Bitcoin denominated, and they just traded these shares of these like companies that like would pay out divs of like mining revenue. But like almost all of them ended poorly. Like I would say at the end, they definitely all ended poorly. But like besides a couple that had like initial success because of the mania. There wasn't like a lot behind them because like it's really hard to make an ASIC, and like the next generation of people that were doing it didn't know anything. They weren't like chip guys who like needed to raise money. They were just like guys who saw that there was a lot of money out there and they just decided to try to take it, which like ended pretty poorly for sort of all the investors in it. So NeoNB was in there, which I don't know if you remember that.
I don't.
That was like, they were going to be the first like Bitcoin bank. And like, there's like a lot of, so I don't know the full story of like what happened there. It looks like they just took the money and run as like an outside observer, but that thing like went to zero pretty quickly after it sort of all happened. But they were like in Cyprus and they had like a physical store. They actually had like a store. If you type it in, like you can see it in like Google somewhere, like all the like NeoNB gear. Dude, they like sponsored, I think, the Bitcoin Amsterdam conference. Their like stuff was everywhere. I think that's where they had it. I have like a whole bag of like memorabilia. I have like a leaflet that's like they're the front cover of the event that they were doing then. But yeah, so like there were other things besides mining, but like in general, these things didn't sort of work out really well. I mean, some of them were just outright scams. Like they made no attempt to like actually build anything.
How would you say it compared to the ICO boom? Because as you're describing it, it sounds incredibly familiar. Sure, there's a couple of good projects that kind of led the way, and there's obviously going to be some that had honest intentions, but there's probably a lot that just tacked on, saw it as a great fundraising mechanism, and everyone gets burned. I mean, was it similar in that way?
Oh, 100%. I think what was different, like the ICO thing, is like they were just slapping on decentralization onto like different narratives. This was like really purely around like mining, and it was like, we can raise 1,000 Bitcoin. We can make 5,000 Bitcoin. We think our hash rate can be this. We think our chip can be this. Like at the end of the day, like the people doing it were not going to be able to do it. But like that was more what it was about versus like we think we can decentralize like food processing. So we're going to launch like a token for it. Like that would be like, but like the narrative like in the mania was still the same. Like the market irrationality was like exactly the same behavior.
The hype and everything. In your tweet thread, you said that BTCT sometimes was moving more than even Mt. Gox. I mean, when I think of early exchanges, that's what I think of. Mt. Gox, I would have never considered Bitcoin stocks as being a bigger mover back then.
No, but there was a couple of days where they moved more than Gox did. Like they had like huge, big days. Yeah, there's a lot of Bitcoin flowing through these things at like the height.
Yeah.
Like there's a ton of trading activity going on.
So what happens at the end? Obviously, this doesn't end pretty. SEC steps in, and this was early. The SEC stepped in, so they've been watching for a long time.
I mean, the thing was called the Bitcoin Securities Exchange. Like, like I said, like there wasn't a lot of
in the U.S.
Like,
was it in the U.S.?
I think they were both run out of the U.S. Bitfunder and BTCT.
Oh my gosh!
Yeah, I'm like pretty sure. So BTCT basically comes clean as soon as the SEC is on them, and like gracefully unwinds it. So they're like, it's over. We have to like return all your money and or like your assets. Like you can't be here anymore. So obviously everything goes to zero. Like nobody, like these things like just immediately like die. And like, but everybody was able to withdraw. Like there was no like issue with that. Bitfunder doesn't end as pretty because they basically realized they were running a fractional reserve as soon as they're supposed to like unwind it, right? So that ends pretty poorly. I think John Montrell was the name of the guy who I think if you Google it real quick, I think he got arrested in Texas. I think that's where he was. Kind of recently, he finally got like, I think sentenced. But yeah, like, I mean, he basically, I don't know if it was like the same thing with like all these exchanges. You never know if it's like fraud or if it's just like sort of bad coding or if it's like some other thing going on. But
he actually just got in trouble in 2019, sentenced to 14 months, fraud.
Okay. So that was like,
he had two exchanges. He had WeExchange.
Yeah. So WeExchange. So this is weird. You had to move Bitcoin to WeExchange and then transfer it to Bitfunder or WeFunder or whatever the frig it was called. Maybe it was WeFunder. Maybe they had the same name. Either way, I think it might. I want to say Bitfunder, but either way,
Bitfunder.
It was Bitfunder. Okay, yeah. So that was how you transferred between the two of them, and then like WeExchange was some like exchange. So I think like WeExchange was the top, and then like Bitfunder was like one of like the faucets you like sort of like moved into, and that. So I guess like the WeFunder was supposed to like be holding all the balances and like didn't have it all. But yeah, when like the tide came out, that thing clearly had some issues. So
I'm
that
curious,
didn't work out well.
When this was all going on, I imagine partly it was because people were in the industry and they were looking for a way to juice returns, and there weren't really altcoin trades. There were, there wasn't too much volume, I imagine. I bet there wasn't even too many altcoins. Maybe Namecoin.
They were around, yeah. Like Namecoin was there, like BTCE was obviously floating, like LTC was big. There's like Feathercoin and like.
But this was how you made Bitcoin, though. It was Bitcoin stocks.
This was more interesting for sure, yeah. And then like I think it aligned a lot more with the thesis of people that had Bitcoin that wanted more Bitcoin, right? Like because they didn't really want to touch alts if they could avoid it. Yeah. So I mean, it was definitely there were altcoin exchanges. Like there wasn't not a thing. It's just I don't know that like sucked up all the liquidity. People went there to sort of trade.
That's man, it's wild. That's probably one thing that's it's never going to be a trend that makes a comeback, I imagine. I don't think we'll ever see Bitcoin stocks again.
I don't think so. I mean, like clearly, like we got enough issues with sort of regulatory issues on like asset issuance of like actual blockchains. Like I think this is a pretty clear line that people know they can't do. So I mean, that being said, like I don't know, we'll get probably closer derivatives of it at some point, but they definitely won't call them Bitcoin stocks like they used to.
Sure.
I mean, you could make the argument that there's some tokens that are basically Bitcoin stocks, right?
Yeah.
I mean, it's they're not going to call it that obviously, but they like sort of get treated the same way.
That's what I was going to say. It's like we got a little bit smarter, it seems like, with the ICO theme, but we know how Bitcoin stocks ended. We know how most ICOs ended. I'm curious now with DeFi, what are your thoughts on this? How do you think this ends? Do you think what's happening here is kind of a quasi security? Are we eventually going down the same path of pumping this too quick? What are your overall thoughts on DeFi?
Oh, I think it's definitely ahead of its skis. I mean, like the part of the problem is like you've got a lot of small asset bases that are like just trading really rich, right? I don't know enough about the specifics of the mechanics of each token to like qualitatively be like, I think this has legs, like this doesn't, right? I would say in general, like I think something will come out of this that like has some like longevity as like a useful product in the industry. Like there's enough being borrowed and lent that there's clearly a baseline demand and like clearly a market risk willing to like supply that's going to like exist throughout. And like I think there's a world where people like the idea that you can sort of borrow and lend freely in a decentralized manner, even if it's like less efficient than doing so in a centralized manner, because like decentralized borrow and lending is never going to be better than centralized borrow and lending. Like anybody who tells me that, I don't buy it, because like there's known credit between like individuals, right? Like if I know you, I can offer you better terms than somebody who has to automatically assume that you're going to rob them,
and it's
right?
Smooth,
like
it's easy, less steps.
Yeah, like I mean, credit exists in the world for a reason. So like I have to believe that that will always be the better model. But that being said, like it is nice to just be able to click some buttons and like you're already like in the system and it's just like done. Like there's like zero barrier to entry to like doing any of this stuff. You don't have to fill out any paperwork. Like so I think there's going to be some of that like persists going forward. I don't know. I mean, like there's definitely some mania in it for sure. Like would I go short it? Like absolutely not. Like I'm not going to try to like pick where like the train ends, but like whether the current batch of like tokens doing it or like the versions that are predominant right now are going to be like the winners going forward, like probably not, but it'll probably be some variation of it that like works out, or one of the projects will be able to like pivot themselves into like the model that like sort of works out there. Yeah, I don't know. That's like my thoughts on DeFi in general. Like, so I think it's useful. I think it's going to stick around. I think it's out there, but I think it's like way ahead of its skis.
Yeah, I can see the trading opportunities. I can watch the momentum on my screen, but it's so hard to decipher and say that one's going to do well based on this style of governance. It's almost impossible right now.
Oh, totally. Especially governance in general is so loosely done. Like people say they care about it, but then nobody ever like participates or seems to care in general. And like they're just generally run by the foundations and like the people involved in it, which is fine. I think that works, especially in the beginning. But like we haven't really gotten to a point where there's been like a governance crisis or like actually people like trying to like vie for different like positions of like this thing going forward.
Yeah, that won't happen until way later when the stakes are higher anyways.
It's
tough to test
before it gets there. So yeah, I think it's that being said, I find it cool and useful.
Sure.
It scares the heck out of me using it personally because like I don't know enough about the tech. Like I can't go in and audit it personally, so like that always concerns me. And I'm just not smart enough in that domain to be able to like gauge that risk of like what is this risk that this thing just disappears, like, and I just get liquidated and I have no idea why.
I'm starting to think there are only like 10 people that do, and those are the 10 people that just keep hacking and draining these things.
Probably.
I think those are the only people smart enough, are the people that drain them.
And what's great is like, I'm not a lawyer, so I won't comment on but it's like, it's not really a hack, right? Like you're using
not at
the
all. It's a trade
as designed. It's like,
sure.
Well, you just sort of were smarter than everybody else. There's that famous ruling with DRW. I don't know if you caught it, where they said it's not illegal to be smarter than your counterparty. That's basically the gist of the judge's ruling. And it's it has some analogy to this DeFi stuff. Just because you figure it out better, it doesn't mean it's wrong. To sort of take advantage of that, it's probably bad ethos for the industry as a whole. But
it has to happen. Otherwise, it's going to happen way later with, like we said, bigger stakes.
With bigger numbers.
Yeah.
Right.
So it has to happen to fill that gap.
I mean, you got to worry that there's people who are sitting on known exploits and this stuff, not acting on it, waiting for the pot to get bigger.
Oh yeah. Yeah, it's going to be wild to watch play out. Those are my thoughts on DeFi, though. I was curious. It's bringing up, I have 3 other themes that I think about a lot. I want to get your take on these before we wrap. And the first one is centralized exchange tokens. This is something that in 2019, these things saw incredible outperformance, especially when other alt sectors kind of really lagged. Nothing did too well. You have coins like Binance pumped all the way through the year. They just aren't doing well right now. Is it because of DeFi, or what do you think is going on? Especially because alts are actually doing quite well. So what the hell is going on?
Yeah, that's fair. I think I had a tweet on about this.
Yeah.
So in general, we tend to like the exchange tokens because we trade on the exchanges. So it's kind of a win-win anyway, just for the knock-on effects. But so BNB's big run was because of IEOs, right? When you needed BNB as to participate, or was the reserve currency for the IEO stuff, that's really when you saw it go crazy. So you don't need to own a ton of it for trading activity. But when people really start speculating, that's sort of where it flows. So I think you have a hangover from that, because Launchpad hasn't been doing a lot.
I don't think anything anymore.
It seems somewhat dead. But what I've heard in the background, especially this echoes into OKX and Huobi and stuff, is this goes a little bit into the politics of how the Asian exchanges run. From my vantage point, is they're always in constant communication somewhat with regulatory bodies in China, whether or not they ever say it. And it seemed to be that China very strongly was IEOs are not okay, but the rest of the stuff is fine, we tolerate it, but this IEO thing's gotta stop.
Okay.
And you saw this with this kind of mini purge of stuff that was going on when they started getting into blockchain, and you really saw that dry up, right? That stopped pretty quickly. So I gotta think that was handed down as sort of a, hey, you should probably cut this out, and they cut it out. But that drew a lot of the attention out of the exchange tokens, and I think you had a lot of that speculation that sucked out of the market for it. So really they probably just baselined more at a realistic demand for their utility. That being said, it's the closest thing you can own in equity, these things, besides that's liquid, besides actually I think in general the big ones are here to stay. They're probably just going to trade as lower beta names with less risk.
Yeah.
Your risk is that they get hacked and blow up in the interim, but
sure, but
you have that if you're trading on the exchange anyway, so it's
and that risk exists for every single project as well. At least these have something going on in the background.
Yeah, they got real business. We'll see as it evolves, how much they want to Binance clearly cares about BNB's price, right? They're very adamant that they want to make that thing more useful. I don't know if that's necessarily true for all the exchange tokens that are out there. If some of them are just cash grabs, but I don't know. I think they're good bets about the businesses that really are the only things that make money in this industry besides miners. That's where all the action is. These exchanges have great businesses, so I don't mind aligning myself with that.
Makes sense. Theme number 2 is large caps like ETH lagging these DeFi things. And I guess this is really more focused on ETH than any other large cap, and it's something that's been tossed around a lot. I talked to Kyle Samani last week or 2 weeks ago, and he was saying that he thinks DeFi projects are going to do very well, but ETH probably won't. It's just not a very direct mechanism on why ETH would benefit from that. And on the other camp, you have people saying this narrative is so strong, how could ETH not catch a headwind? How could ETH not do so well in the back of DeFi? I see both sides. What do you think here?
Yeah, I don't know. It's funny that people always have to be on such extremes with
everything. No, not at all. Not at all. But
no, not you, but just the people you referenced. Yeah, right. It's either terrible for ETH or it's great for ETH. I think it's baseline marginally better for demand for the asset over time. Here's the thing. So you don't need a ton of like capital inflow to like move the net DeFi market cap, right? Like some of these tokens probably doubled on like very little sort of net
Tiny.
inflow coming into them. You need a lot of money now to like move the price of Bitcoin and ETH. Like more for Bitcoin obviously and like less for ETH, but like you can't have like 50 million of inflow into ETH and then be like, oh, it only moved 5%, and then like have the same inflow for DeFi and it doubles and be like, why is ETH lagging DeFi? It's like, well, like they trade very differently. Like one is like massively speculative and like tiny, and like one is like a little more established and like liquid and robust. So I think you are seeing net positive flow into like it has outperformed Bitcoin on the year, right? Like that's not like trivial. So yeah, I think that it is having a net positive good effect. It's going to be diminished compared to what you're seeing like in DeFi. I don't know what people want. So they like want to start seeing like
ETH
double
5x
overnight. Like that's like we're past that. Like it's grown up a little bit. So you know, like I think that mania of 17 and 18 like hasn't been shook from like a lot of people's minds about like what the vol of this thing is probably going to be like going forward.
Sure. Probably a net positive, but not as much as the ultra ETH bulls are expecting.
It's not a negative, that's for sure,
Yeah.
right? Like any marginal usage of the asset incrementally like has value.
The other thing I think too, there's no hangover, like you said with the Binance coin and how BNB suffered that from the IEOs. ETH obviously had that from ICOs, that hangover effect of projects dumping their ETH. This DeFi narrative is a lot more constructive, right? It's lending, borrowing, it's infrastructure. There's not really a dump after with ETH.
Yeah, it should be like less. It should be a little more neutral on like actual ETH. Yeah, because you had a lot of people using ETH just as like the reserve currency for the ICO stuff. So if you don't need it, you don't like hold it really. So yeah, I think that's a fair. So I don't know. I would say definitely positive. Just probably not like the life shattering moves that people are like looking for in the asset.
Sure. It seems like things are being tamed. Number 3 is the Grayscale premium trade. And this one's gotten so much attention. You've had a couple threads. It's been talked at nauseum, but I think you're going to have some good insight because I still have a couple questions with it. So I want to break it down 3 different ways. How does the fund work, right? People see these numbers and they say Grayscale bought more Bitcoin than was even mined. But how does it actually work? And then we'll kind of go into how the trade works, and then we'll talk about, is it actually bullish or bearish? But how does the fund work? What is Grayscale?
Yeah, so we'll just like talk about the GBTC, which is the Grayscale Bitcoin product, because they all sort of work the same way. So when like Grayscale will get inflows into the trust, like people buying it at NAV. But what they can also do is they can also do what's called like-kind exchange, right? So if I have 100 Bitcoin, I can give Grayscale 100 Bitcoin, and then they give me the equivalent in shares back, right? So like they don't have to go and like buy anything, right? Like it could be all like-kind exchange. And what you get is a lot of people doing a trade where they borrow Bitcoin for, let's say, 5%, and then they put it in the trust, and then they are able to sell it in 6 months for like, let's call it an 8% premium. So then they collect 3% on that, right? Then they return the borrow, and then they do it. So like they're cycling it. So the thing is that you can't look at anything in like absolutes because it's not all of that's buying, not all of that's like kind. It's some like blend of the two. It's mostly like kind, like because they used to break this out in their old reports. They don't do it anymore. Probably because they want to like keep like this air of mystery around it, and like they like the narrative of it like growing really big. But in general, like the thing that you really care about is like the fact that that premium persists, right? Because if that premium is persisting, it means that there's like a lot of, or at least there's a good chunk of demand for the trust shares, aka Bitcoin, at the end of the day, right? Because that risk is still getting placed with somebody, and like that's really what matters. So like I think the fact that I don't think it's like people want to be like, oh, it doesn't mean anything for the price. Well, like that's not true either. The fact that people are making $250 million of this a quarter, and they're placing it in the market, and the market's absorbing it at a price higher than the spot market is currently, you can't say that that doesn't have any effect on it. Like that means that the spot market is probably undervalued to some true price that's like the equilibrium of like where GBTC and like the current price is, if that sort of makes sense, right? Like people are willing to pay above market for the trust product currently. So like those two have to converge eventually. And I mean, spot probably comes up and GBTC comes down.
Sure. So, even if it isn't all fresh, net new purchases, all this $1 billion, going into GBTC, them, soaking up all the Bitcoin mining flow, since the premium still exists, it shows that someone's buying it. Who is buying it? Like, why does the premium exist?
Right.
Who's forced to buy these things?
Nobody's forced to buy these things, but like, well, I guess some people only have this.
That's what I'm saying. Regulatory wise, I imagine their
tax
hand is
efficient.
forced. Okay.
Right. Like it makes sense if you want to put Bitcoin in your like tax like deferred account. Like that's the only way. It's not the only way. It's the easiest way to do it.
Okay.
And then some people are like, look, this thing trades historically with like a 10-15% premium. I don't mind buying it at 7% premium because like maybe
it could go higher
for a little bit. Yeah. Or I think people are really quick to judge, like be like, that's dumb. Like who's doing that? And like, yeah, sometimes when you have like the ETH trust trading, I don't know, whatever it was like 700% over NAV.
Yeah.
Like, yeah, that's dumb. Like that shouldn't be happening. And like you have unsophisticated people that are like clearly buying that. But like for something such as GBTC where it's like a slight premium, like that probably is outweighed with the tax benefit that you're going to get on that thing. So you just like sort of stick it in there and you forget it. Like there's a lot of people that own that thing and like Roth and like 401k type like vehicles.
Yeah,
to, like keep it going. So and then there's a lot of people who just can't hold physical, right?
Yeah.
But like. And like some of those people may just decide that it makes sense to like buy GPTC in the market. But like in general, those people should probably just buy it at NAV. Like unless there's some reason they can't, which I don't understand why there would be. So you do get that flow in there. So some of that is like real cash demand that's like moving into the market as well. So I don't know. I'd like to see Grayscale break it back out into like what's Litecoin and what's not. But like I don't think they're going that direction. And again, I think they're like just not going to say anything going forward.
So since it is some of its like kind, it's not ultra bullish, but at the same time, it's so bullish that the premium persists both on the GBTC product and the ETH product. I think that's probably a fair characterization.
It's bullish that they're putting a quarter of a yard into the market every quarter and it persists. Like that matters.
Yeah. So the premium's the important part there. I think the breakdown of the two matters a little bit less. Still matters, obviously, but the premium persisting is the biggest thing.
Yeah. And something to do, I mean, for like viewers listening, like if you are planning on holding Bitcoin for over a year, or in this case now it's 6 months, but like if you're planning on holding 6 months and like obviously your own personal tax situation aside, like you can just give them the Bitcoin and then trade it that way yourself, right? You can harvest that. You can give it to them, get the shares at NAV, 6 months, sell it and get more Bitcoin. Like you can do that.
Can anyone do it? You have to be accredited or what?
You got to, I don't know if you have to be accredited, but there is like a 50K min ticket size. You have to be accredited. So I would bet, but I don't know. It's on the Grayscale website. You can go like look it up.
Someone out there listening is typing that in right now.
Yeah, somebody will put it on like on Twitter after it or something.
Exactly. Hopefully some people listening can capture that yield. Well, Dan, I appreciate you coming on, man. This was a lot of fun to chop this up real quick.
Yeah, it was great.
A little Bitcoin stock history. Everyone else got. Hopefully the trades, the themes make a little more sense as well. I'm going to let you get back to work, trolling and trading. Two things I can respect, man. Cheers.
Awesome. Thanks for having me, man.
Yeah, appreciate you coming on.